Ugh. Happy Sunday, everybody. The Lord's Day. Welcome back to Strongman Personal Finance. We're going to do something new, interesting, and exciting on this channel. We're going to try and see if we can find one nano cap stock or one micro cap stock that is even a possibility of investing in. Because there are so many clownish, publicly traded, over-the-counter traded nano caps and micro caps that it's a very dangerous world out there for you would-be 10x investors. Now, why do people get attracted to micro caps and nano caps? Well, scammers love it because they can massively influence the price of those stocks. And newbie investors love nano caps because they think they can 20,000x in 5 seconds. But the whole nano cap, micro cap area, at least from my personal understanding, I mean, I could totally disprove myself in this video. But I think the whole micro cap, nano cap thing is a disaster. Stay away as far as you can, unless you want to do a very, very tiny speculation. And you're going to see why I, as an accountant, think a lot of nano caps and micro caps are absolute trash. Now, I've done zero preparations, okay? Zero preparations for this video. But we're just going to pull up a bunch of micro caps. I'm just going to look through a huge list, and we're going to try to find one that is growing revenues, that's profitable, that's not brand new, that's not massively diluting shareholders, because I have a sinking suspicion that the vast majority of these stocks are massively unprofitable clown stocks. So let's go ahead and dive right into it, and let's find a nano cap that's going to 10x, okay? So I went to stockanalysis.com, and then I went to Stunk Lists. Okay, you go to Stunk Lists down here, and they actually have it broken out by a bunch of stuff. Now, if you're a clown, you know, you just go to the biggest companies by market cap, and you buy those, like Joseph Carlson. But they also have mega caps, large caps, micro cap, mid caps, small caps, micro caps, and nano caps. So I say let's start at micro caps. Small caps, you're going to find profitable companies. Micro caps, there may be some profitable ones in there that actually make money. That's very rare nowadays. And nano caps, which are absolute hot freaking trash. I mean, you know what? Let's start with nano caps. Let's look at the largest nano caps. Because if you look at the small ones, look at this. So there's 1,002 companies that are classified as nano caps. And they have a total market cap of $21 billion and total revenue of $65 billion. Look at the market cap of some of these companies. Like, obviously, I highly doubt any of these companies are making profits. I would be shocked if they were. So let's go ahead and start with the largest one. First U.S. Bank shares. Now, I don't know anything about this. What is this? Okay. First U.S. Bank operates as the bank holding company for the first U.S. bank that provides commercial banking products and services. Blah, blah, blah. So this is some kind of bank that was founded in 1952. Is this one of those banks that just went bankrupt? Let's see. So we go out 5 years. No, we go out. Whoa! Okay. Looks like this bank has been publicly traded for a long time. Now, I don't really like banks. The more I've researched banks, I just don't like them. Because one thing I've noticed about banks is when they go out, when they go bust, they really go bust. I mean, they drop in straight freaking lines down. Remember First Republic, the little speculative bank stock I was talking about? I was such a bussy hands. I bought it for a day and then I sold it. I made $4. But you could see how that stock just cratered. It just went straight down. Because when banks go bust, they go bust. Okay, they don't just they don't slowly have declining revenues. They have some kind of bank run or some kind of catastrophe, and the bank just plummets. The stock just plummets 99% in a second. Okay, it's a very scary business to invest in. So I don't know anything about this, but if we look at the financial statements, let's see how their revenue by revenue is doing. So the revenue's been, basically flat for a while. Do they actually make any freaking money? Oh, they actually have margins. Wow, they've actually been improving their operating margin too, as well as their profit margins. And they have free cash flow. Is this bank a possible investment? I don't know. Let's look at the balance sheet. How's the shareholders' equity doing? Okay. I mean, their equity's basically stayed stable. Let's see what's going on here. There's not really much information here. I wasn't expecting to see a freaking bank for the first one. Yes, you can see there's incomplete information getting filtered into here because it says total assets of $1 billion, and it doesn't even have the total liabilities. So, or here it is. So it has a total liabilities, but it literally has like nothing. Okay. So honestly, I would potentially look into this bank. If I really wanted to buy a bank, just look into it because out of curiosity. But you got to remember, it's a $49 million market cap bank. There's a reason why this bank is $49 million. What do they have? Like three freaking, they have 158 employees. I mean, I guess I would check it out. See, this is the one problem with stockanalysis.com. You really have like no information here. This is not enough information. This balance sheet to know what the heck's going on with this company. So you'd actually have to pull up the financial reports. That's why this is always like a starting point. Like if you're looking to buy stonks, you want to start here, and then you want to actually dive into the actual financial reports because this doesn't tell you literally anything. Okay, so I guess I would check that out. Okay, let's close that one. And no, there's no endorsement to buy any of these. As a matter of fact, I recommend you buy a total market index fund. I'm just saying, if I wanted to buy an individual nano cap or micro cap, I would just go down this list and put stuff aside. Okay, something to check out later, something to check out later, something to check out later. Next, we have NextCure Incorporated. What's this? What is this? A clinical stage biopharmaceutical companies engages in discovering and developing novel immunomedicines to treat cancer and other immune-related diseases by restoring normal immune function. Okay, well, let's see. We go to the financials. We go to the quarterly financials, and it has zero revenue. Right off the bat, completely dismiss it. Massively unprofitable, share diluting, nothing going on here. Skip. Go to the next one. Very simple. If it doesn't have revenue, it doesn't even have freaking revenue. Why? What are you doing? Okay. Go ahead and have fun speculating on this crap if you want to. Okay, next we have Inspire MD. Let's see. What is this? A medical device company. I'm trying to think of an inappropriate medical device, but it didn't come to mind. Focuses on the development and commercialization of proprietary micronet stent platform for the treatment of vascular and coronary diseases in Europe, Latin America, the Middle East, and Asia. What about America, boy? Huh? Yeah! Okay. Oh, my God. So right off the bat, like I don't even have to look at this stock further. Okay, see these blue lines here? This is the revenue. Revenue. This is their losses. Every single year, they're just annihilating profits. Massively negative profits. Garbage. Next stock. Okay. So far we found one company that I would look at, but definitely not investing because I'm not a bank man. Okay. This one right here, First U.S. Bank Shares Incorporated. I'm sure I'm missing something about it. I don't know. Maybe there's some backstory to this company, but I would at least like look into it and say, okay, what is this company all about? Because at least they're making money. Okay. Let's go to the next one. Nightscope. Sounds like a video game. Nightscope. Okay. Let's see. What's the stunk done? Okay, it's gone straight down. That's very encouraging. It's a penny stock. What does this company do? Designs, builds, and employs physical security technologies in the United States. What do they have, like locks or something, doorbells? The company's solutions combine the physical presence of autonomous security robots. Oh my God. Watch this stock just 10x because, oh my, autonomous AI robots? It's the future, bro. Okay, so it's got robots and a human-machine interface to reduce crime. Let's see, 111 employees, been traded since 2022. Oh, do we even need to look further? Look at these losses. You see how easy it is to just filter out these clown stocks? See, most of you investors, like you think you're so smart because you started investing in 2020 and index funds are boring. And then you go buy stocks like this. Most of you clowns were buying stocks like this during the pandemic. And I can look at this in half a second and say, this is hot freaking trash. Okay. Look at those losses. Okay. I mean, if you want to look at the financials, I mean, yeah, I can see why this company's a nano cap, a nano crap. Look at the operating margins. Negative. Oh, but it's getting better, strong man. It's only negative 225%. Okay, pass. Next. But watch, the stock will go up. Oh, Mullen. Remember Mullen? This wasn't there's a lot of clowns pumping this stock. What does old Mullen do? How's the stock done in the last 5 years? Straight down. See, you clowns were buying this, okay? Like, these are such easy passes. And you clowns were buying this during the pandemic because you people are clowns. An electric vehicle company manufactures and distributes electric vehicles. It also operates Car Hub, a digital platform that leverages AI. AI! Buy the stock, bro! It's the future, bro! Oh my God! Look at those losses. Good Lord. Do they not have revenue? Oh, wow. Look, they don't even have revenue. What is this? This is garbage. Oh my God. What a piece of trash. Okay. See, this is how easy it is. Like, it doesn't even have revenue. They're not selling anything. Revenue means you've sold something. You've charged for a service. They're not even selling anything. They're just losing money. God, what a joke. And this is pumped by big YouTubers. What a massive joke. Good Lord. Alzamed Neuro. Okay, that doesn't even have revenue. You can just discount that right off the bat. The Marigold Companies. Marigold? That's my wife's name, Marigold. It's profitable. Oh my God. Through its engages in investment fund management, so grifting scammers, beauty products, food products, and security alarm. What kind of company is this? It's some kind of, looks like it's some kind of like holding company. Because you can see that what it's invested in is so diverse. Like, this is a very odd conglomerate company. It operates as an investment advisor to exchange traded funds. And so if you even wanted to do you'd have to do a lot of analysis on this stock because it has so many different business segments, and you'd have to look at each segment and see how profitable it is, what its competition is, what its future market is. There's a lot going on with this company right off the bat. But we can go ahead and look at the financials. At least they're making money. Okay. So it's got a market cap of 49, trailing revenue of 35, net income of 2 million, and a PE ratio of 31. Let's look at the financials. All right, so they had a big bump in revenue in 2020, and then it's kind of like started to decline since then. Let's look at the operating margins. Okay, their margins are massively shrinking. I'm curious what percentage of this company's revenues and profits come from investment management. Let's see. So operating margins are going down massively. Profit margins are going down massively. Free cash flow is going down. It's actually negative. Okay. So basically, it had a nice little bump during the pandemic. Let's go over the past 5 years. No 5-year chart. When is this traded? 96. Okay. I mean, they make money. I mean, I guess if you wanted to spend some time of your life looking into this, you could. But I see declining revenue and shrinking margins. Could be something that reverses in the future. This would be something I would like. If I was really curious, I would at least look into it. Okay. I'm not saying buy this company. Let's look at their balance sheet. Shareholders' equity. So they have positive equity. At least they're not underwater on their debt like AMC. Let's see. Total current assets, 25 million, of which 18 million or 19 million is very liquid. They have current liabilities of 366. So they're actually not doing that bad when it comes to liquidity or insolvency. I don't think this company is going to go bankrupt unless something crazy happens that's unexpected in the next year. You could see they have enough cash to pay off all their debts. So that's not a huge concern. Let's see where most of their equity came from. So they issued some common stock in 2020, and so most of their equity has come, more than half of their equity has come from retained earnings. So that's a good thing. That means they're recording profits. So it's something to like look into. Okay, I can guarantee you I'm not buying this, but let's see. Operating cash flow. It's been anemic. It's actually negative recently. That's a little concerning. What are they doing? They issued shares at the beginning of 2022. Debt's really not an issue. Let's see if they acquired anything. Okay, the last time they made an acquisition was early 2022, which makes sense because they're burning cash, bro. What's the market cap? Okay, so this is basically the stock price. So it shot up in 2021, and then now it's gone. So this is something I would at least look into, okay, if you're interested in microcaps. But I am not saying buy this. The whole purpose of this exercise is to show you that the vast majority of these companies are trash, and there's a reason that they're microcaps or nanocaps, because they're freaking trash, okay? Even a company like this, like, you know, it's profitable, but that doesn't mean it's a good buy. So I don't want to mislead you and confuse you. Let's see. Bank. What's this Mogo? Mogo. Okay, hot nuclear trash. Look at this. What is this? What does Mogo do? Is a financial company in Canada. They provide digital solutions to consumers to get in control of their financial health. It offers the Mogo app to access a digital spending account. And it enables the buying and selling of Bitcoin. Okay, this is some kind of like SoFi, wannabe SoFi without a banking charter. God, what is this? Let's see the revenue. All right, I mean, at least revenue's gone up over time. It's a good profits. They've always been massively unprofitable, except for 2 quarters. I mean, they're getting closer to profitability, but they're not there yet. Let's look at their balance sheet. Let's see. They have massively shrinking shareholders' equity, probably because of the most recent loss. All of their equity has come from common stock, so all of their assets basically have been financed by issuing stunk. Let's see. Retained earnings. Okay, so this is a company that's been unprofitable for a very, very long time. It loses a lot of money, and they're sustaining themselves by issuing stock. Let's see. Okay, they've had negative operating cash flow for the past 2.5 years, except for one tiny little quarter. Okay. This is, I mean, like, I guess you could glance at it. I don't know, this negative net income. See, like, that's unusual. You could see, like, when you see a like negative net income for all these years, and then you see this massive crash, it's probably some kind of one-time charge, goodwill impairment, this, that, whatever. That's something that happened. If you wanted to actually research this stock, but this is a money-losing company. So don't get freaked out. Like, if you see a company that's profitable and then you see this, I mean, it's obviously worth looking into, but it could just be a one-time charge. You don't want to assume that's going to be the profit margin forever into the future. So that's Mogo. Man, we're getting a huge list here. Let's see. Funware. I think I've heard of this. What is this? Integrated software that equips companies with products, solutions, and to engage, manage, and monetize their mobile application portfolios. Okay, I don't understand anything that means, but I've definitely heard of this stock on YouTube. And I can see why it's been, I can see why it's discussed on YouTube, because it just loses money every freaking quarter. And it's even got volatile revenue. It's not like a consistent revenue grower. It's freaking everywhere. So my initial analysis is hot freaking nuclear unprofitable trash. Next. Let's see. No revenue. Graphics Group Limited. Let's see. Do you make money? Unprofitable. The manufacturing and marketing of graphene products in the People's Republic of China. How's the stunk done? Did this just get listed? Well, it was founded in 1981. Okay. Yeah, I would avoid this. Yeah, I mean, there's like no information on here whatsoever. But it's unprofitable. It's a very tiny company. I wouldn't trust any really tiny Chinese companies. I wouldn't trust any small U.S. companies either. Let's see. Okay, we got Miramax Medical. See, look at the revenue, right? And then look at the market cap. What the hell? What is going on here? What's going on with this stunk? Develops a novel technology for bioengineering fully transplantable organs. Bioengineering fully what are they, growing organs? decellularization to remove the porcine cells from the organs obtained from pigs and replace them with unmodified human. Are you trying to play God? You aren't God, you're a man. God will smite you. So they're taking pig organs and they're making them into human organs. That's interesting. Let's see the profits. It's the future, bro. Oh wow. Wow. Look at that. Man, they're changing the world with that revenue. This is a class. Oh my God. Look at these numbers. This is mind-boggling. Negative 101,000%. Next. It's going to change the world, bro. It's the future, bro. eBang International Holdings. I like it. I wonder what this is. Develops in the research design of application-specific integrating circuit chips and the manufacture of Bitcoin mining machines in China. Okay, this is crypto. This is crapto. Look where they made all their money, their revenue too. This stupid company. See, me personally, I don't touch crypto. It's just hot trash. I mean, this is probably one of those stonks that'll go up massively if, there's some kind of crypto boom. Let's see what happened during the clown market. Yeah, this is one of those crypto stonks. Oh, crypto's the future. Buy the miners and manufacturers of crypto mining machines. And then it crashes. Trash. I don't touch crypto. Let's see. Digital health acquisition. There's nothing there. No revenue. Fathom Digital So this is interesting. Look at that. $155 million of revenue with a $48 million market cap. What's going on here? Oh, that's what's going on. Okay. Oh, my Lord. What happened to this company? Digital provides plastic and metal additive, computer, blah, 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 blah. Okay. The company serves the technology, defensive, aerospace, medical, and IoT sectors. Holy freaking crap, man. Yeah, they had a massive loss. I don't know why, but they did. So their revenue's been trending down. Let's look at their profits. All right. Gross margin, I guess this has been trending down over the last couple of years. Operating margin, I see negatives. Let's go look at the annual. Let's see. Yeah, something happened. I don't know what it is, but they had a massive loss. It could be an impairment. It could be anything. Let's look at the balance sheet. Okay, yeah. Let's see. It was a goodwill impairment, it looks like. When you see a massive loss like that, it's 9 times out of 10, it's a goodwill impairment. And you can see that because look at the goodwill. It was almost $1.5 billion. And then all of a sudden, boom, it's gone. There was some kind of write-down. Now, the scary thing is their intangible assets are higher than their equity. So the only reason they have more assets than debt is because of intangible assets, which is not enticing. Cash and cash equivalents, $12 million. Current life. Ooh! Uh-oh. Okay, they got total current assets of $58 million and total current liabilities of $71 million. So they owe more in a year than they have, but they do have most of their current assets are in receivables. Let's see if this is normal for their quick ratio, current ratio. Let's look at the annual. What is their normal current ratio? It's been trending downwards, and their quick ratio too has been. So they're on the path of potential liquidity issues. This company's scary. This balance sheet is not a good balance sheet. I don't like this balance sheet. I don't like the fact that they have the only reason they have positive shareholders' equity is intangible assets. And let's see. Yeah, basically, then they have more long-term debt than they do tangible assets. Next, let's see. Heliogen. All right. Let's go look at small micro caps. Let's go see some micro caps. All right. Let's see. Let's do the largest ones. Okay. White Horse Finance. What is this? Did you see how many stellar stocks we found? Okay, what's going on? Is a business-developed, non-diversified, closed-in management company specializing in originating senior secured loans, lower middle market, growth capital industries. Originating senior secured loans. Okay. A lender. Let's see. It typically invests in companies between 5 to 25 million that have an enterprise value between. Okay, so it looks like it's lending. This company lends money to clown companies. Okay. Basically. Let's see. Let's look at their financials. Revenue by revenue is going up. Strong operating margins, strong profit margins, strong free cash flow margins. Let's look at their balance sheet. I would actually look at their actual financial report. Let's see. Total assets. Yeah, this doesn't tell you anything. I mean, I guess you could look into it. They lend money to people. Senior secured notes. Okay. Sounds like a bank to me. Bankish. It's got bankish tendencies. Let's see. Stellus Capital Investment Corporation. Private middle market company. It invests first lien, second lien, debt financing. Okay, this is another like investment company. Oh, look at those profits, bro. It's making money. Let's see. Okay, revenue's going up massively. Operating margins are insanely high. Profit margins are insanely high. It's interesting. I'm sure there's a catch. Yeah, look at the that's interesting. Look at the difference between net income and their operating cash flow. Okay. So their net income, they're profit, they're making profits. So you have these huge profits. And then you look at their cash flow and it's negative, 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 negative. What does that tell me? Maybe they have a bunch of deferred charges on their balance sheet. Because typically, like you can recognize what am I trying to say here? If you pay a bill, but it's for future periods, it's a prepaid. You can put that on your balance sheet and it doesn't show up as an expense. So, but you still paid it, so that's a cash outflow. So that would show up on your statement of cash flows, but it wouldn't show up as an expense yet on your income statement because it's sitting on the balance sheet. So this is weird. The difference between the operating cash flow and the net income. That's very odd. I don't know what's going on with that. Yeah, this is one of those weird companies I don't really understand, which is why I'd probably avoid it. I don't know what the hell they're doing, to be perfectly honest. You know, I'd have to spend a lot of time researching this. I mean, but their revenue is good and their profits are good, but there's more to the story, obviously. There's much more to the story. When there's such a variance between cash flow and operating or profit margins, something weird's going on. What's the balance sheet? Shareholders' equity's going up. Oh my God. Yeah. All their equity came from stock. No. I don't even know what's going on with that company, to be perfectly honest. Just being perfectly honest with you. All right. What's going on here? Let's see. This is so time consuming. Do people actually do this? Or do you just use filter? You use filter stuff, and that's how you find your stunks? I don't necessarily trust filters all the way. Because sometimes you can put a filter on, like, oh, it's been profitable. You know, or its profit margin is this. But when you have the filter on there, you go look at the stock, and that profit was just because of one bad quarter. Or you could put a filter on that you only want to see profitable companies, and it potentially takes out a company that has normally been profitable but had one bad quarter. I don't know. I don't do this crap that much. I don't know how you people research stonks like this. I just react to clown stocks. See if we can find anything that sounds interesting. Giga Cloud. What is this? Sounds like a clown Elon Muskrat company. Market cap 290, revenue 505, profitable. Okay, so it's trading for It's a price to sales under 1. Why is this so cheap? Provides end-to-end B2B e-commerce solutions for large parcel merchandise. Connects manufacturers primarily in Asia with resellers in the United States, Asia to execute cross-border transaction across furniture, blah, 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 blah. Okay. Let's see. What's happening to the revenue by revenue? All right. It's been going up. Let's look at the profits. Profits going up. Okay. Gross margin going up. Profit margin going up. Free cash flow positive at least. Let's look at their balance sheet. Positive shareholders' equity. Big stock issuance, but equity from retained earnings as well. Let's see. Total current assets, 284. Current liabilities, 112. So probably not going bankrupt within the next year. Long-term assets, 152 versus long-term liabilities of 113. I don't see any intangible assets. So their balance sheet's not the worst. Operating cash flow. Let's look at it from an annual perspective. Okay. Looks like they had a bad 2021, but overall it's grown. I mean, I guess if you wanted to look into it, you could. Giga Cloud Technology. I don't know. Okay. Let's see what else. Purple Innovation. I think I've heard of this. Wasn't Lefebvre buying this? I think he was buying this. This sounds really familiar. Purple Innovation designs and manufactures mattresses, pillows, and cushions. They offer bases, foundation, sheets, mattresses, bed frame, sheet cushions, weighted blankets, duvets, bidets, as well as pet beds. It's an e-commerce online channels and retail brick and mortar wholesale partners. Okay, well, let's see what's going on with the perp here. This is a little foo-foo stock. Let's see if we can find Jeremy talking about this. I swear he was buying this stock. Let's see. Purple stock. Jeremy financial education. It probably went down. He just stopped talking about it. No? I swear he was talking about it. Whatever. All right, so that's Purple My Thurple. Let's see the revenue. So revenue's declining. That's wonderful. Margins gross margin has trended down over the last couple of years. Operating margin is massively negative. Profit margin is massively negative. Free cash flow margin is negative. Hot trash. Let's see the balance sheet. This is garbage. All right, we'll do one more. I think I'm going to call it a day. I'm going to go for a run. Let's see. Oh, did I delete the checklist? Oh, that might be it then. Okay. Well, let's do some comments, and then I'm getting out of here. I like to take pictures of my toes and sell them to people online to buy stocks. Okay. Should I buy Bud Light stock? You do whatever you want, man. Bitcoin easy 10x. Yeah, of course. If I hear microcap, I know we're coming to the top of the market. Yeah, see, most of those stocks, like, they're microcaps for a reason. Most of them are massively unprofitable. If you go through that list, especially if you start from the bottom, you'll find a couple that are profitable, like very rarely. But like 99 or 98 times out of 100, they're massively unprofitable trash. That's why they're microcaps. So when you hear somebody talking about a microcap or a nanocap, you want to be suspicious, okay? You want to have a little suspicion there. I mean, I'm sure there's a gem or two in there, but it takes a lot of time to find. But I would avoid any of those unprofitable, revenue-less companies like the plague. That sounds painful. Water guaranteed. Is that actually a stock, or are you screwing with me? Alkaline Water Company. What is this? Water. Hold on a second. I'm going to pull this up real quick. WTER. Water stock, bro. Want to buy some water, bro? It's new and innovative. It's water. Produces, markets bottled alkaline water. Okay. Oh, wow. Look at that. They're growing their revenues. They are, but they're also losing money consistently. Let's look at their balance sheet. Let's see. Oh, yeah, they're about to have more debt than assets. That's a wonderful long-term investment. Let's see. Current assets of 22, current liabilities of 22. They're very cash light. Very cash light. Long-term assets 1.8. Long-term debt. This is a very tiny company. Okay. So yeah, their current ratio is a little concerning. They're not. This may be normal for how they operate, but they've been very cash light for the last couple of quarters. I don't like that. See cash flows, and plus they have negative operating cash flows. So they don't have a lot of cash on hand, and they have negative operating cash flows. Interesting stunk. Their revenue's going up. They are growing their revenues hand over fist. But they like to lose money. They like to lose it. That's water stunk for you. Let's see. These microcap companies exist for the sole purpose of issuing shares and diluting. Yeah, see, what you want to do is if you have a failing business, right, you need outside capital. You need money to come in to keep you afloat. So if you're able to get yourself publicly listed, you as the owner of the company, you can pay yourself a salary. You can give yourself stock options. You get your stock listed. It trades. Clowns potentially give you money. You issue shares. You take that money from the shares. You pay yourself a salary. And you let the grift go for a couple of years. You save your money up, and boom, you're a millionaire. I need to start my own publicly traded. I'm going to have Strongman CPA LLC be publicly traded. DFLI could be a good one for this video. Let's look at it real quick. DFLI. Dragonfly. What does this company do? It trades like a penny stock. Look at that. Manufacturer supplies deep cycle lithium ion batteries for RVs, off grid, blah, but also focus on energy storage. So it's like a rip off Tesla, basically. Let's see. Revenue by revenue, basically flat. Let's see. Operating margins, massively unprofitable. Oh, but they have a profit margin. I wonder why. Free cash flow. Okay, this is trash. Let's look at the balance sheet. Shareholders' equity. They probably just had a stock issuance, it looks like. Let's see. Current assets, 75. Current liabilities, 50. They're sitting on a lot of inventory. That's interesting. Yeah, you can see how they almost ran out of cash. Look at that. They had 28 million of cash, and then it went down to 0.65. Jesus. Long-term assets, all property, plant, and equipment, 15. Long-term debt. Okay, I mean, they're probably not going to go bankrupt within a year, but they do have this current debt that's coming due within a year. They don't have enough cash to pay it off outright. They'll probably have to refinance it. It's a cash burner. Yeah, this is garbage. No thanks. I saw a company that has a market cap of 21. My 2-year-old son has a higher market cap than that company. What about Echo Wave Power? All right, let's do it. I know you've been talking about it. Echo Wave Power. Oh, come on, man. It doesn't even have revenue. I think I've looked at this before. Did you make me look at that before? That's a clown stock. What are you doing? SGHC. Let's see this. SGHC. Supergroup. Revenue. What's the market cap of this? Oh, so it's not like a super tiny. 1.4 billion of market cap, 1.4 billion of revenue. They're profitable. Operates online sports betting and gaming ops. So it's basically like DraftKings, but it actually makes money. Let's see. So revenue, basically flat, like your mom. Gross margin, so their margins are deteriorating. Margins deteriorating. Cash flow. All right. There's something wrong. The information's incomplete. This is how you want to look at the financials or the actual financial statements. I mean, I guess. I mean, there's some negative things going on here. Deteriorating margins, flat revenue. That's usually a little scary. Sounds like a value trap, bro. Let's see. Well, 10,000x in 5 seconds. Gary, if you're talking about wave power, guaranteed it will. What's up, Bussy? My dividends from my dividend portfolio goes all into VT. How's that for a strategy? Or you could just buy VT. Wave isn't profitable because it's still a start. Yeah, I mean, it's a gamble stock. I get it. Look up Lizzie, though, if you want profit, because I think it actually is. Lizzie is high. What is this? An audio entertainment and social networking platforms in the People's Republic of China. It provides podcast, live streaming, and audio entertainment products. Let's see. Interactive audio experience. Okay. Oh, they just became profitable. Look at that. Let's see. Okay, revenue by revenue. It's moving up. Let's see. Shares. Creeping up, but nothing crazy. Profit margins, like it's trending up over time. Or sorry, gross margin trending up. Operating margin, it's been profitable since the last quarter of 2021. Okay. And margins are increasing. Okay, it's interesting. Something to look into. Let's look at the balance sheet. Growing equity. Okay, this company was a money loser for a long time. So basically, it had to sustain itself for a long time from common stock, but now it's finally profitable, so it can actually, survive without outside influence or outside capital raises. Let's see, current assets 760 versus current liabilities of 347. Okay, they have a pretty solid current ratio. Long-term assets, mostly in property, plant, and equipment, of 45. Long-term liabilities of 9. Okay. So, I mean, their balance sheet looks pretty solid. I don't see any, red flags here. They're sitting on a lot of cash. I mean, I don't know what they're doing with that cash, but they're sitting on it. Let's see. Okay, there's no information there. Oh, interesting. If you do this, don't look up Lizzie. You're officially a clown. I looked it up. There you go. Let's see. Wave may have had approximately zero revenue for 12 years, but even though Tattooed Chef had revenue, they're the same thing, right? They're both massive money losers. So it's like, if you want to speculate, just buy one. I mean, they're the same freaking thing. Larry Jones said, dude, that is a clown stock. 100% clown stock. Let's see. Please clown on Fisker. All right, let's go look at Fisker. So easy to pick out a clown stock. This is not hard, guys. Oh my God. Okay, they make EVs. Got it. Oh, look at those revenue spikes. Man, they had 198,000 of revenue. There's people that make more money than that as private individuals. Or they were law. Oh my God. Do I even need to say anything further? Look at those margins. Negative 61,000%. Do I need to say anything further? Next. What a joke. Let's see. I love you, Strongman. I love you too. Will you start a finance YouTube channel auditing business this year? No, but I'll do your taxes. I'll do your YouTuber taxes. Let's see. I love you, Strong, but I think QQ out for the next third. Hey, that's the thing. We don't know. It could. It could possibly do that. But it also couldn't. Your hair is making me hot. Is that a meth pipe? What are you smoking? Will you DCA 30K or just buy it all at one time? I don't know if you're talking to me. Who are you? Are you responding to somebody? I personally, it really depends. So I have the temperament where if I got 30K right now, I would immediately throw it into VT. That's what I would do. 100%. I'd max out my solo 401k. Obviously, make sure I don't go over the contribution limits because I have 2 401ks. But I would just throw in the 30K because I don't care. I know in 30, 40 years or 50 years when I finally sell those shares, or God help me, even 60 years. Because yes, I may still be alive in 60 years and I'll still have VT in 60 years. That's 60 years in the future, 50 years in the future. I don't care if the stock market goes down 30% the next day if I put in 30K. So I personally would throw in 30K if that was me. If you have a different temperament or you're closer to retirement, I would just do what makes you comfortable because you could potentially buy in at a top. That happens. You could potentially buy in at the top. And then you're sitting on capital losses for 5 or 10 years on that 30K. So it really depends. Like it's a time frame issue and it's a temperament issue. Do you have the temperament to not be worried if your investment goes down? And what is your time horizon? I mean, if you have if you want to use that money within the next couple of years, maybe it shouldn't go into the stock market at all. I don't know. I'll give you a mic. It's C-Box. What is it? Fart box? What is this? C-Box. C-Box. Box. Am I reading this wrong? It's not even popping up, bro. Yeah, everybody liked the video. Do you have an opinion on Jasmine? It's considered trash. Crypto, trash. That's my opinion. Jeremy's 10X stocks, Nordic American Takers, Tattooed Chef, Carnival Cruise Line, Voyager Honest, GoPro, Beyond Planet, is that Planet 13? Avant Brands, and Smile Direct. He's a clown. He's an idiot. I just buy when a company's a good price, mostly large caps. I mean, at least you're buying profitable companies. Why has Larry Jones stopped talking about his holy coin? Because it went down probably. Do you ever short? No. I bought a put against AMC like 2 years ago. That's the only time I ever shorted something. I heard shorting low floats can be very profitable. I wouldn't short low float stocks. You could be annihilated, dude. Is this a joke? This has to be a joke. I would not short because if there's some kind of short squeeze or massive price action, you'll get annihilated. Free Kid Freshie. What a loser. Kid Freshie's a clown. That's a fantastic way to end up at the truck stop. Exactly. I wouldn't short anything, dude. And if you want to short, just buy a put because the worst you can lose is it can go to zero. That's the worst. Larry Jones stock mowing may do a clown stock drive-by. It did more than 100x if you do that. Yes. Elemental is speaking some truth here. Don't ever short. Just don't do it. Okay. That's for the clowns. Just buy an index fund. I traded water once before Shaq did a commercial, made a decent profit. Did that really pump the stock? Shaq making a commercial. Let's see. Water's long-term chart. Let me go back and look at that again. Water stock, bro. We just lose money all the time. Stunk. Oh, yes. Let's go look at this stunk again. Look at this beautiful chart right here. Wow. Isn't that a beauty? Down 98%. But it's got growing revenue. That's why I say revenue my avenue. Water did a reverse split this year, but Shaq's in. Oh my God, Shaquille O'Neal's invested. Let's see. In 1939, Templeton, during the Depression of the 1930s, had his broker purchase 100 shares of each NYSE listed company, which was then selling for less than $1 a share. Is that your story? I don't see any other comments from you. Let's see. I'm getting so many ideas. If guys, if you want like a really to look into a stock, you're gonna have to pay me for that. I'm just looking like a brief overview of some of these. Is this a joke? All right, that didn't even pop up. Similar Scientific. Okay. Went up a lot. What does it do? Tech solutions to improve the clinical effectiveness of healthcare providers include QuantaFlow, a 4-minute in-office blood flow test that enables healthcare to use blood flow measurements. Do they just have one product? Is that it? I mean, wow, they've been making money. Interesting. Okay, revenue's growing. Very high margins. Operating profit stellar. It's been there for a long time. Profit margin stellar. Free cash flow margin. It's gone down the last 2 quarters. That could be because they're doing investments. Let's look at their balance sheet. Okay, equity's going up. Are they buying back stock? Interesting. Yeah, they just became profitable in late 2020. They were losing money for a long time. Current assets of 55, current liabilities of 8. That's good. Long-term assets of 14 versus okay, so they basically have no debt. They're doing okay. Operating cash flow. So, okay, they've run into cash flow issues. You can definitely see that. Look at that. Yeah, I don't know. It's like it's trading cheaply, or cheaper than it has been, obviously. But you got to ask yourself why. Why is the market pricing this so low now? What's going on? I mean, the revenue's growing massively. They're very profitable. That's good. But what is the market seeing that is making this stock trade so cheaply? Because you could have this is one of those companies, like they make bank. Like their profit margins are really good. But my question is, okay, if profit is this good and revenue's growing this quickly, why is it trading so cheaply? You got to look into that. I don't know. It's interesting. Let's see. You think you should invest in your kid's name as soon as he is born, i.e. put in an index fund so it help offset? Yeah, I mean, that's called a 529. I don't know if you're in the United States, but I put money into my kids' 529 plans. It's a tax advantage college savings plan. And I actually get a tax deduction in Virginia, not federal, but in Virginia for putting money into Virginia 529. I put $100 per month per kid. I'm not putting $500 a month in there. And it's just for college. And then you can do other accounts. Like you can do like what's called a UTMA or an UGMA. And basically you put money in there. It's an irrevocable transfer. And then at a certain age, your kid gets possession of that money. I don't like that concept because my kids could grow up to be losers potentially. Sad to say, anybody can grow up to be a loser. So I don't want to like put all this money away from my kids and then they're freaking clowns. And then I'm forced to give them the money. Like if my kids are drug addicts, I have to give them money. They're just going to blow it all. So I don't like that concept. If I want to give them money, I'll just sell my personal assets and give it to them if I really want to do that at some point. What you could also do is if they're working a job, let's say they have like a summer job, you could they can open an IRA and you could help fund it. I mean, you could put money in their IRA as long as they have enough earned income to qualify. That's something I may consider doing. Like if my son has a summer job when he's 15 and he makes 12 grand, I'd be like, hey buddy, I'll put $5,000 or $6,000 in your IRA, because I like you or whatever. But that all depends if he's a loser or not. So that's the answer to that. It's really up to you. I do the college thing, but I don't do the UGMAs. All the good stocks that went small caps, there are probably some good ones. The problems, yeah, you really got to look. And then even then, you could miss something and get wrecked. My girlfriend bought a Fisker, so oh my God. We'll check out these microcaps after the chat. After chat. Bro, you'll be dead from chewing tobacco. I quit chewing tobacco. Strawman, I know you're seeing this. Call me after this live. I'll give you 3 stock tickets that will change your life. No more stripping on YouTube. Oh, thank you. Will you buy VEQT instead of VT? No, I'm buying VT and that's it. As a matter of fact, I had some money sitting in my business bank account, and I just transferred that to my solo 401k. I authorized that earlier today. And guess what I bought? VT Wax, $550 of it. That's right. I'm so rich, bro. Just vape then, bro. Needs to make an ETF that shorts every stock Jeremy lists. It's easy money, would have gains better than V. See, the thing with Jeremy stocks is like he might have a good year where he buys clown stocks. And sometimes clown stocks go up massively. They go through massive runs. Like AMC, every freaking clown stock gets its day in the sun, right? But it's still a clown stock. But the dangerous thing is if you short his clown stocks during a 6-month period when they run up, you can get wrecked. So I just watch the disaster unfold and laugh. I would like to see Strongman do vape tricks while reviewing stocks. Can you review Twilio? Is that Twilio? Twilio? Twilio. What's Twilio do? This sounds very familiar. Cloud communications platform to build, scale, and operate customer engagement within software. Okay. A lot of these, I don't I have to like see what these companies do. I don't really understand. Like when I read something like this, I don't know what that actually means. I really don't. Let's see. Okay, stock went down. Let's look at the revenue. Okay, revenue's growing, but the growth rate has slowed down, and they actually had declining revenue for 1 quarter. Look what happened to Netflix when that happened. This looks like Netflix's chart, to be honest. Okay, so they had great revenue growth, but it's massively slowed down. Okay, at least quarter over quarter. Margins are slowly compressing, but nothing crazy. Okay, it's a money loser. And it's not just like a slight money. It loses money all the time. It's an unprofitable company. Negative 26%, 21, negative 46, negative 33. No, I would say no. Companies like this are just pure speculation because they just lose money hand over fist. Look at that operating cash flow. They're just burning cash. Not my type of stock, bro. InMode. I've done a video on InMode, my commode. This is a Israeli medical device manufacturer, I believe. Let's see. Okay. I'm noticing a trend where it looks like first quarter of each year the revenue drops. I wonder why. Interesting. Holiday spending by doctors. Gross margins, stable. Operating margins, high. Very high operating margins. Yeah, I mean, it's a very profitable company. Let's see. Ratios. But for a company growing that quickly, at least historically, that's a low PE. So I don't know. I avoided this company because when I looked at it last, it seemed too good to be true. Like everything was perfect. Like it had like no debt. Everything was perfect. And it's like, and the company had like a 10 PE. It's like, why? Why does this company have a 10 PE if it's so perfect? Let's see what happened to the stock price. Yeah, I remember everybody was like, oh, InMode. And then it massively collapsed. I think I looked at it around here. So, okay, I missed some gains, but I don't know. Something about the stock freaked me out. But at least it makes money. Let's see. You have an HSA? No. No, I have a military health insurance. It's very cheap. Do you think you should put money in a market fund on an annual basis rather than pay a premium? On an annual basis? rather than pay a premium for health insurance. What are you saying? Are you asking me if you should not have health insurance? I mean, I don't like the HSA concept because I use a lot of healthcare and I would put money in the HSA and then I would just take it out. I would just be spending a bunch of money on healthcare. So I just use military TRICARE. I don't have a high deductible plan. You think Lefebvre will come to his senses and buy it? No, of course he won't. His business is not buying it. Can you look at Dropbox? Somehow it's profitable, overvalued. That would have to be a dedicated video. Dropbox is can't just look at it from a easy perspective. Review Albertsons. I'm about to close this video, boys. Strongman, can I be your stand? You got to explain what that means. What are you going to do when you walk in on your son watching? Just laugh. Like, go ahead and burn your money, son. I don't care. If the market thinks Jeremy stocks should be of your portfolio, then he makes them 10%. The solution isn't to short them, it's to ignore them. Jeremy's a clown, okay? If you haven't learned that by now, I don't know what to tell you. My bank tried to sell me a MYGA. I'm 30. When I went back home and why it wasn't for my age and told him, he got scared. What is an MYGA? MYGA. Multi-year, an annuity. You don't need a freaking annuity. Yeah, that's for old people, man. Annuities are, it's just it's income insurance. Basically, you have a load of cash, you give it to an insurance company, and they guarantee you some kind of check for a certain period or life. And it basically ensures you never run out of money, which I guess if you're worried about blowing through your savings in retirement and you're a clown, okay, maybe you should look into an annuity. But if you want to manage your own money and not be a moron, you don't need an annuity. You'll probably do way better. And annuities have like high fees and stuff. Let's see. Yes. All right, guys, that's it. I'm going to go for a run. Talk to you later. Cheers.
Oh, merry stock market. Oh, man.